Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, July 21st, 2021. In this video, we're going to start out with the broad markets and the what is by far the most important developments coming up right in the next week or so here, and that'll be the earnings from all the market-leading FANG stocks. So collectively, we're talking, stocks that have a huge impact on the market. And those, so I'll get to those in a second. We'll do an update on gold, silver, the US dollar, and euro. I'll hit on the grains quickly, wheat and corn, financial sector, oil, and the energy sector, and then any other miscellaneous things. Might hit a quick update on AMC because I've been providing coverage of that one pretty actively recently. Just a little side note: I have some projects this week. Preparing for a trip tomorrow. I will be gone the entire day. And yesterday was I had to take the day off. I didn't realize it, or I would have given you a heads up. I had several things to do in preparation for the trip, and then it turned out to be an all-day event. So pardon my absence yesterday. I'll be around a little bit today and certainly this afternoon. So if anything big happens between now and then, I'll provide an update. Okay, starting out with the markets. We did get a sell signal last week. There's your sell signal on Friday on the daily chart here. This is the trend line on QQQ. The uptrend line, same one I've been highlighting on the 60-minute chart of QQQ and NQ, but this is a daily chart. So we had a solid impulsive red candle, and 110% the sell signal is still intact, and as such, I'm viewing any counter trend rallies or rallies into resistance as potential shorting ops, but there is that caveat, if you will, or at least a little disclaimer. Hey, all the big market move leading FANG stocks report next week, and so anything that happens between now and then must be taken with a grain of salt. Once these stocks report, they're either going to foil the breakdown and foil the sell signal or build upon it, most likely. So that's where we're at, but it is still intact. And so, as I said, that was an objective short and still is at this point. We're well below the breakdown point right there, and we're well below the recent highs as well. A couple other things to note here when we're on the daily time frame. Here's that trend line, nice and clean. You can see a lot of reactions. Same thing I just showed you there. A little snapback rally. This was one of the biggest down days in many months right there. And other things I look for, I like to use these indicators. I look for high-level bearish PPO crossovers after an extended uptrend. This is an extended uptrend. This is an extended uptrend, and here's a pretty prolonged uptrend, and you can see these what I call high-level PPO crossovers. You want to see them up here. There's a zero line down there, and when the PPO is there, they often signal and coincide with major trend changes. These are the biggest corrections in years right here, that one and then that one, and you can see the bearish PPO crossovers. We just had one there. Not only that, what you want to look for are overbought conditions, or especially extreme overbought conditions. So we were overbought right here, then followed one of the biggest drops in years. We're persistent overbought readings and negative divergence there, finally played out for correction. An extreme overbought reading right there, and there's your drop, and so forth and so on. That would drop from that extreme overbought condition was about 14%, and here we are coming off an extreme overbought condition. So here's where I'm going with this. A lot of evidence points to the fact that whatever these big FANG companies report, and I have no doubt they will be stellar, blowout record earnings. They always are, for the most part. Most quarter after quarter, these companies are growing. Their earnings juggernauts, but quite often, especially after an extended uptrend, the market will, it's a buy the rumor, sell the news kind of thing. And look, there are no guarantees. They can go either way. If there were guarantees, it would make it super simple. We just right now short everything we had, buy the leverage out on the most out of the money put options, to give us the most bang for our buck, and then just go tuck away the key. But that's not the case. So you watch and react. And I'm comfortable going into those earnings with some short exposure, and then wait and see what happens. And if we start to break some support levels, or rally back into resistance levels, maybe add to those index shorts. But there it is. So that's the case right there on the daily chart. The Qs are the most important index because of these the heavy weighting in these FANG stocks. Here's Apple. Real quick, Apple reports next Tuesday. All of these companies, by the way, are after the market close. Tech companies tend to report after the bell. Banks, financials, and some others report before the bell. So keep in mind, you won't see the move reflected in the charts till the day after this. This is July 27th. That's next Tuesday. That's Apple, largest of them all. And you can see nice clean trend line, and this is one reason, in my opinion, technically, that we bounced. Well, a couple things. We already hit some targets already. We bounced off my initial targets. So number one, you expect those reactions. Number two, here's Apple. I had mentioned this before we even broke down. The Apple was comfortably above its trend line, but look where it brought us down to. Perfectly, right there. Boom, hit the trend line, held it, held it. So here's one we're watching, and this is an important trend line. You want to watch this one for a solid break and or daily close. This was a brief intraday dip, closed back on the trend line, closed above it there. We're above it right now. So that's Apple. Again, they report Tuesday. Microsoft on Tuesday. So Tuesday's the biggest day of all. Microsoft broke down already. This is a stock on a sell signal. Why isn't the market going down? Well, because other ones like Apple held support, and the index itself held support. Well, yeah, I'm not going to. It was a little bear flaggish, but not enough flagpole there. So I'm going to leave that alone and just tell you that this is on a sell signal. Any snapback, let's say they report on Tuesday and they rally and backtest that trend line, that's an objective short. If it closes solidly above the trend line, that's a great objective place to stop out and get out and say, hey, guess what was wrong? I took a shot. And nobody bats 1,000. Trading's all about identifying setups and taking objective entries. And if you're bull, what you want to do is you don't want to see Microsoft dip much below that. Just remember, once again, when a company reports, the initial reaction is often not the one that sticks. In other words, these guys report after the bell. They're going to be up, down, and after hours. The initial reaction comes out on the numbers. Then the company does a conference call and they walk through that. They give if they do, they give any forward guidance. And so all I'm trying to say is don't read too much into the initial reaction. What you want to see is how does it trade going forward, Wednesday, Thursday, etc. After of next week. So there's Microsoft on sell signal. Here's Amazon. They report July 29th, Thursday after the bell. And that's what it looks like. Big divergences. Divergences have been building. This would be the trend line I would give Amazon, comfortably above its trend line right now. Great company, earnings juggernaut. COVID, was a home run for this company. For those 5 people out there in the world that didn't already do a majority of their shopping online, were doing the old brick and mortar thing, they had no choice but to kind of get comfortable and open an Amazon account if they hadn't. And so I think it's a net plus. But like anything else, here it is, negative divergences in the chart, overbought conditions. So we'll see. I just wanted to point that out, that they report the 29th. Facebook, July 28th, next Wednesday. Facebook is below trend. We have this nice bearish rising wedge right there. Negative divergence at the highs. Sell signal breakdown. Kissed that 50-day moving average right there the other day, and so far. So there's a second fang on a sell signal. We need to see the majority of them, and ideally all of them below trend. So I showed you Amazon and Apple still above trend, and then Microsoft and so far Facebook below trend. Google or Alphabet. Purple trend line is the one to watch right now. That's the closest one. We're right above there. We're wedging higher. Divergences continue to build. And again, if I couldn't make heads or tails of this chart, didn't have an opinion to bullish or bearish, I would say it's a crapshoot. It always is when you go into earnings. However, the odds are whether a stock will rally. And I'm not talking the day after. I'm talking the weeks and months after. It's usually priced into the chart as to which way it's going to go after earnings. And this one, you need that sell signal, but you need to break that minor trend line and then break this bigger trend line. And then these are your potential targets on Alphabet. And that's the GOG share class. Tesla reports July 26, Monday. So that's it. I call them the FANGs plus T, Apple, Amazon, Microsoft, Facebook, Alphabet, and Tesla. And they're all coming up. So again, whatever happens this week, I view it as noise. because these guys, once they report, and remember, they're the biggest components of the NASDAQ 100. They're also the top components of the S&P 500. They just don't have as large of a weighting there. All right, let's move on and talk about the other stuff. So this is, again, going to chop around. It's going to be tough. The markets tend to go in a holding pattern right up until these guys report, so don't expect any big move up or big move down until then. Okay, let's talk about gold, silver, real quick updates. Gold, this is the daily chart of GLD. Gold last buying up here. We hit the top of this buy zone here. We've had this for many months, and so far so good. Pulling back. Let me look at the chart of GC Gold Futures. It gives us a little more visibility near term. So we hit, this was the setup most recently right here, bullish falling wedge breakout. Hit first target, hit the second target there. It's already been hit. Did that, and we had a divergent high. We pulled back, and as I said back here, and I still maintain, R1 right here, that's a resistance zone, is actually now S1, meaning support or first support zone, and that's it. And I've said you can buy pullbacks to that level. I'm still intermediate, near-term, intermediate, and longer-term bullish on gold. You can buy it there with a stop somewhat below the bottom of that zone, is about 1790 or so, and I still favor a move up to at least my third target here, and there's your stop. So this is an objective entry into gold, add-on or new entry. Let's look at the dollar, and the dollar has been resilient. It's been building these divergences. We had a bearish rising wedge pattern there. We broke down, back tested, and we've set up. It's the same thing. It's still a bearish rising wedge pattern. It's just even larger now, and that's it. And there's a nice clean trend line. And the way it works is the more reactions you have on a level. Remember, this trend line I didn't have here before because we only had a couple reactions here. Now we have a lot of reactions here, and so boom, we break that, and it should be a pretty swift move down to my targets here, and that would be, if and when that happens, that's going to be bullish for gold, or more bullish. Gold's already started to rally, and here's the other thing about that. I love to see this because remember, gold and the dollar tend to move inversely, and it's simple mathematics. It really is, because gold is priced in U.S. dollars. So if a dollar, dollar drops in value 10% or whatever it is, it's going to take more dollars to buy an ounce of gold. So if you freeze everything else, supply and demand, in other words, then yeah, that drop in the dollar is going to increase the price of gold for that reason. Dollar goes up, rallies, it's a stronger dollar, it takes fewer dollars to buy an ounce of gold. So there we are, we're rallying in the dollar, yet, as I just showed you, gold already took off. Gold's playing out to the technicals right here. So while the dollar's been going up, so is gold. And that shows me that the demand for gold, or the buying right now, is overwhelming, or that increase in the price of the dollar right there. So I view that as quite bullish. And so now if you get a falling dollar, it should really get gold going here. So I remain bullish on gold, and like I said, like anything else, it works out or it doesn't. So you don't put everything in that one trade. It's one of many. Silver, we just continue to build those divergences, and that's it. Positive divergence. You're going to need to see gold and the dollar rally, and if so, silver. Here's my target, still up there, 27.51 or so, and then 28.49. Those are near-term targets. I already showed you the dollar. Euro's basically going to be an inverse of the dollar, and we have just this big, beautiful bullish falling wedge right there. So this is a trade in itself right there. If you guys trade currencies, any forex traders, or euro futures, these are E7, the euro futures. If you don't trade futures or forex, FXE is the euro ETF. UUP is a dollar ETF, but if you're going to go short the dollar, I'm sorry, ETN technically speaking, UDN, it means dollar, DN is in down. So that would be the bearish dollar ETN, bullish dollar ETN, bullish euro ETN. And as I always say, if you're going to trade those ETNs, the dollar and the euro, they don't move up 5-10% in a day because they're currencies. So you can take a much bigger position size, and therefore, if you're only going to target, let's say, a 5 or 8% rally in the euro or drop in the dollar, it makes it worth your while. There's an update on corn or wheat. I don't know if I updated this recently, but we already hit my second target, and that was my, this was a swing trade. And I also mentioned for longer term investors, this could be the beginning of the next leg up. We bought it. That was major trendline support on the wheat ETN right there. Pull back to trendline support. So the case was made for longer term bulls and commodities to enter and hold on. But for a swing trader, that was all I was looking for there, T2, and we already hit it. And we were overbought. Indicators are constructive. We're starting to turn back up here, PPO at the zero line. But again, I think it's, define your trading style and your plan. If so, you got out at T2, or at this point, maybe you're holding out for more as a swing trader. You probably want to set a stop below this target here. That's 694.76, somewhat below there. So I'll probably pare back on updates on that trade because that's been hit. And then there's corn. I give you these, the targets on corn. We hit that 576.89-ish target just looks like today. So if you didn't do so, you may want to book some profits in corn or tighten up stops. There's a trend line you want to watch. If that trend line is violated, it's probably going to give us a bigger correction in corn, and we also have some divergences there. See, a little rising wedge. So if you want to short corn or do anything like that, then wait for a break of that trend line. Minimum target would be right there, 544.13. You have a reaction low and a big old gap right there, another old gap right there. A lot of reactions, so that would be your swing target, quick trade target for a pullback in corn, 544.13. Crude oil, again, I've been highlighting the futures recently because we can see more. Here it is. We had 2 hits of my 66 target. That was my current and final near-term downside target. Like I said, there is plenty of more downside, I believe, based on the longer-term charts. This may have been a major top in crude, and if it's not, we make a marginal new high. This was, as I showed you in recent videos, long-term resistance, and this was my near-term pullback target. So if you took the, there was a breakdown right there. There's a sell signal on crude. That was a drop, even to the target. I'm not going to count the overshoot. That was about 11.6% drop. Very nice trade on crude, and this is a reflexive bounce. This was my first target. It was support about 70.42. Support once broken becomes resistance. So there's your trade right there. You can start, scale in or add to a short trade on crude there. New short if you book profits there. Recycle back in, and I'll update this later on, zoom back out, and give you some next downside targets for if and when we reverse here off 70.42-ish, 70.50-ish, we'll call it. And then, of course, also break below the recent lows there around $66, $65 should open the door for the next leg down in crude oil. And if that and when that happens, as I suspect it most likely will, then you're going to have some nice trades on the energy stocks. You already have, as I mentioned, crude drops. Energy stocks are going to drop. This is XLE, Energy Sector ETF. There was our nice breakdown, trend line, bearish rising wedge. Just like the stock, this looks just like NQ that I started with, or QQQ on the 60-minute chart. You had the breakdown, little snapback rally, and then the next leg down. And we hit this 47.60 target recently, right when crude hit the support. So this is a no-brainer. Cover crude. You're going to cover your XLE. These targets were laid out in advance, and so far a nice bounce today. But again, based on these big divergences, probably going to be another leg down coming. XOP is another energy sector ETF. You just get more bang for your buck trading these guys, XOP and XES, and I've covered those before. This one reversed shy of 47.75, but this is why I always say if you're going to trade, let's say GDX, a gold mining stocks, you want to keep an eye on the chart of gold, because if gold hits support, that's what's going to drive the mining stocks. Gold's going to rally. In the case of these guys, you can see it reversed a little shy, but it wasn't random, because at the same time we hit that, we reversed. That's when crude oil reversed, and that's when XLE, the big energy ETF, reversed as well, and it also hit support. So that would have been your cue if you were trading XES to be flexible and to say, you know what, I was targeting, or Randy was targeting 47.75, but crude oil just hit his target and it's bouncing. XLE just hit the same target or comparable target, and so that's kind of a takeaway. And that's why I like to look at a lot of charts. That's why these videos go 20, 30, sometimes 40 minutes, because it's not simple. There's a lot of moving parts even if you're only trading one security, you want to watch other interrelated or closely related securities that may impact that one. Okay, next up would be, well, that's it. Let me do an update on AMC. This one just was playing out so well to the technicals. Here's my 60-minute chart. Remember, this trend line was a target, and it's now we have a major reaction off it, so it becomes even more significant. So nothing falls forever. Remember, this thing's got cut in half so far. It's down over 50%. Peaked out around 70, dropped all the way down to almost 30. So got more than cut in half right there. And I do see more downside to come, but that's what you want to do when you fall down 50+% to dual support levels, 33.13. You're going to get a bounce. It will, I believe, go down more, and I give you the other targets. Where to short now to add back if you covered? If it gets up to 52, and if it gets up to 52, remember this triangle break was your sell signal there, but I'm going to try to grab the top triangle line. I'm going to extend that out and look at where that comes in. And that's not mere coincidence. You have the downtrend line, which was the top of that triangle back here, gave us this sell signal, and 52 is resistance. So not one but two resistance levels, just like right here you had not one but two support levels. All the better. So there's your level. Whether it gets there or not, who knows? You could fall shy of that level and go down, and whether it goes and breaks out, anything's possible, and that's why you shorted at 52 or a little bit under. I wouldn't try to get every last penny out of the bounce, and you put a stop somewhat above, and then let the charts do their work. Okay, so that's it. Unless I missed something, unless I hit the pause button and missed recording any part of the video, I should have covered the broad markets, the FANG stocks, gold, silver, the euro, the US dollar, the grains, wheat and corn. No, I didn't do the financials. I knew I missed something. The video was too short. XLF, just touch on real quick. That one, we had the sell signal right here and the break of this trend line right there, and then we took out the secondary trend line. We hit my first target. We came down, we hit it again, and we hit it again, and we put in, I need to point this out, we put in positive divergence when that, right here recently, we're bouncing. However, based on the charts and the fundamentals, fundamental outlook, at least by my interpretation of the financials, I think there's going to be more downside. This is pretty big. It is very big resistance, $37 right there, and we're not far from it. So if you're looking to short the financials on the bounce, I would short up to, but not much above, or not any above 37. I'd be more concerned about stopping out above that. Where to stop out? Well, it depends on your target. Are you going for T2? Are you going for T3? Or are you swinging for a home run, even more than that, or the grand slam? And if so, you can give it a little more room. But if you're only going down to T2, then just calculate it. If you short at $37 or a little close to it, and you're targeting that next target at 32.83, that's 11 point, almost 12% drop. So you can give yourself a 3% stop loss, and that would give you a nice 4-to-1 risk-reward ratio, or give yourself, I'd say 4% stop and do a 3-to-1 risk-reward ratio, meaning you're risking a dollar to make $4 or $3, I should say, on a 3-to-1 risk-reward ratio. So that's how that looks like. KRE, the regional banking sector ETF. There's a downtrend line to watch. This is an objective short right here. And you can see glass half empty or glass half full. If you're bearish, you say, oh wow, nice, bounce back to resistance after the breakdown, the sell signal, 63.75 price resistance, so it was former support, plus downtrend line resistance. Gotta love it. It's objective. If you're a bull, you want to see a breakout, and that's where you don't go long right here, right below dual resistance levels. You wait to see a breakout, ideally a solid close above there, and that would be your buy signal. And if you're bullish on the financials, you're probably looking for new highs. Then you need to see the previous high taken out right there, about 72. And if you're bearish, then I've laid out targets for you on KRE. And KRE, once again, is a regional banking sector ETF. Okay, that does it. That is everything that I wanted to cover today. And remember, FANGs are going to report next week, so expect, if you're going to be trying to trade the indexes or even sectors like this, keep in mind you're probably going to see a little bit of choppy, aimless kind of grinding around trading over the next week or so. Okay, we'll wrap it up here. This is Randy Finney with Right Side of the Chart, and again, I will be out away from my desk the entire day tomorrow, and if anything big happens today, I'll get another update out to you later today. Have a great day.